So we do have just over 10 minutes for questions, and I'd be happy to call on individuals who have questions. Yes?
Alan Berger, University of South Carolina, former Federal Reserve Board economist for just 26 years, not too long. Not too long. Since you're the vice chairman for Supervision, I just have to ask you a supervision question about supervision of community banks. Since the financial crisis, supervision has switched mostly from a micro-prudential point of view to a macro-prudential point of view, looking at systemic risk, in particular. My question for you is, are community banks systemically important? Do they have an effect on the financial system? In other words, obviously individual ones probably do not, but as a group, maybe we think of, if they're all doing the same commercial real estate lending and so forth, maybe they are systemically important. I'd just love to hear your view on it.
So I think that's an interesting and important question. It certainly is. Obviously no individual community bank is going to be systemically important. I think that argues for a difference in how we approach the supervision of community banks versus larger banks. And I think that tailoring is the buzzword that we have been using. I think that is important all across the spectrum of banking. And from the smallest bank to the largest bank, I think we need to make sure that the nature of our regulation is appropriately tied to the nature and risk of the institutions we supervise. So there should be a different approach to the supervision of community banks. I don't think, the question that you raised, I don't think that the community banking ecosystem is completely free of systemic risk for the country. It was a number of very small savings and loan institutions that created not the crisis of 2008, but the crisis of the late 1980s. And while that was not as dramatic as the 2008 crisis, and one could argue, was that systemic or not, or was it just big? It was important. So I don't think that in the supervision of community banks, we completely set aside the question of where is risk going in the system, how is risk in the community banking industry evolving. We can't completely set it aside. On the other hand, because of the diversity of the industry geographically, by business model, we've talked about a lot of differences in urban and rural markets. This is a more diversified class of banks. We call them community banks, a more diversified class of banks than some of the other categories of banks that we've talked about, where the recent legislation has focused us a lot on banks from 100 to 250 billion in assets, and that's a much smaller and less diverse group of banks. So, that's a very long answer to the short answer to your question being, it's not irrelevant, but I also think that there's enough diversity in this group that we shouldn't overemphasize the so-called macro-prudential regulation of community banks, because there is some, even though there is some potential risk for there to be a systemic effect.
Okay. Any other questions? Yes, in the back.
As a community bank in Center County, Pennsylvania, I want to say thank you for your perspectives and the efforts that are done by the Fed to support community banking. And I want to share that while we serve students at Penn State University and the Amish, and a span of technology acceptance that is about as far as you can get away from each other, we see big banks and to be honest, large credit unions pulling out of the rural markets because they're just not profitable. We just opened a branch in a town of 600 people because it is a critical link in a small Amish community in one of our valleys where agricultural lending is highly constrained today by milk prices, which are down. And so our focus on the success of our community is important to us because we are only in that community. If our community doesn't succeed, we're not here. We don't succeed. And I think that perspective, a lot of community banks in all of rural America and some parts of urban America, as we're in the State College market where Penn State University is, It's so critical for us to stay focused on this, especially around the idea of regulation, tailored regulation, and the impact of the expense organizations of our size have relative to maintaining the kind of CRA requirements and other regulatory requirements that continue to burden us and take away our ability to compete and our ability to remain viable in those small towns and those small communities.
Thank you very much. That is a topic that I am, that I'm very focused on, and that I'm hopeful soon we'll have another governor who is very focused on them. Mickey Bowman, who's here today, we are very eager to have her join, and together both of us can focus on these community issues. But I have a sort of very personal empathy for the points that you're making about the cost burden and the regulatory burden on community banks. One of the things that I have done as a private equity investor is invested in a number of community banks. And while a lot of my career had been with the very largest financial institutions in the system, what I learned in that experience, which is my most recent experience of exactly what the business models are of community banks and what the burden of regulation really is, and how that affects the choices that you make and can you expand or not, is something that, having been a board member of a number of these banks, is very real to me.
Thank you.
Any other questions? Yes?
Thank you for your remarks today. It's heartening to hear discussions about community banks in rural communities. But we heard yesterday from Chairman McWilliams about a transparency initiative. I'm sorry, my name is Katie Boskin. I'm from North Carolina. We heard a transparency initiative from the FDIC, and my question is, do you think that that's something that the Federal Reserve might consider implementing? And if so, either through these listening sessions or through some other mechanism, how would you envision the Federal Reserve doing something like that to encourage transparency with the industry?
Yes, so I read Yelena's speech after she had delivered it last night, and it's very soaring, and she has already gotten a dig to me as to, you gave a very witty speech, and I have given a vision for America. Which is true. But part of that is part of your question, I think, shows maybe a little bit of a communications failure on my part, because that actually is a very big part of what the current Federal Reserve Board is trying to do, and that I, in particular, in the regulatory area, have been stressing that the importance of transparency at the Federal Reserve in our supervisory efforts in particular, but also what we do in monetary policy. We've increased the amount of information we put out around our monetary policy decisions. We have shown how they compare to sort of typically used rules. We've invited more input with respect to that. On regulation, we'll be closing very short. We have put out for comment, and we'll be making final very shortly, really substantial improvements in the transparency around our stress testing, for the largest banks, which has been an utterly black box up to now, and now it's kind of a medium gray box. But we're making progress on that. And to wax a little cosmic for the moment, not that I'm trying to compete with Yelena, but I do think that I have believed since I arrived, and it's a big, it's a shared belief with Chairman Powell. It's quite important to him that one of the tasks of central banking, not just the Fed, but central banking around the world in the period post the crisis, is to demonstrate that we are appropriate institutions in democratic societies. We are given, and for good reasons, a significant amount of independence in how we function. And we all know the historical reasons for why that is and for how the outcomes of central banking, particularly in monetary policy, but also in financial regulation, can turn out to be quite bad if they are too subject to the political pressures of the moment. But with that independence comes a very strong obligation to retain our accountability, and transparency around how we operate is an extremely important part of how we do that. I think, again, central banks around the world have this job post the crisis. We did a lot of things that people said, they can do that? I had no idea. And then said, why can they do that? Why is that not something that should be the democratic decisions of all of us? And I think there are good reasons for that, but we have a very significant job. Again, over the course of the next decade, I think a big part of our job is to demonstrate why that independence is appropriate, because we will hold ourselves accountable, and being transparent about our regulation is how we do that. And so an important part of how we do that. There are a number of other elements as well. So that has been something that we have been working on a lot and taking concrete measures about. It'll be a big part of what you see from us in the future. And now I'm going to go back and read Yelena's speech again and improve my communication around that for the future.
Very good.
Thank you very much.